Good morning, everybody. For those who don't know me, my name is John Cartwright. I'm Chief Executive of the Association of Real Estate Funds. Welcome to everybody here in this room, but also welcome, hopefully, to everybody watching us in Edinburgh, in Jersey, and in Guernsey. This is a first for us as an association in three ways, this event. Firstly, it's the first event that we've talked specifically about technology and its likely impact on our markets going forward, on our industry. Secondly, it's the first event that we've organised specifically at the behest of our Education and Training Committee. And the topic came out of a questionnaire which we sent to members. It's the number one topic that members wanted to hear about. And thirdly, it's the first event that we've ever done where we've streamed to remote locations, so hopefully the technology will work. Before I hand over to our chair and speakers, I'd like to say a few thank yous. Firstly, to NatWest for hosting the event here. Secondly, to Morant Ozanne for sponsoring the event and for hosting it in Jersey and Guernsey. Thirdly, to Aberdeen Standard Investments for hosting in Edinburgh. I'd also like to say thank you to Tantrum, who are filming and streaming the event for us. And last but not least, to thank the AREF team for organising the event and for getting here at some ungodly hour this morning. So without further ado, I'll now hand over to our chair, Nick Mansley from Cambridge Real Estate Research Centre, who will moderate the session and introduce our speakers. Thank you.
Thanks very much, John. And I'm conscious of time, so I'm not going to say very much at all. But I told you about a couple of things we're doing in Cambridge I thought you might all be interested in. One is there's a new Centre for Digital Built Britain in Cambridge, which is working with the BEIS department to really think about how we can have make the most of the digital economy in the built environment. And I'd love to hear from people who've got ideas about thinking about the broad infrastructure and construction industries as well as the more commercial real estate and residential areas in terms of how we can do things differently. And the other area is just working with the industry as well. I think it just in terms of thinking about how to do things in new ways and bring new information to bear on the problems we've been trying to deal with for many, many years. So that's really what I want to say about what we're up to. In terms of the agenda for today, we've got some really interesting talks. And I think as you're listening to these talks, I hope you just be thinking about what does this mean for us? What could we do differently? What do we need to change? Where are there opportunities to partner with others and so on? And just to make the most of what they're saying. We've got Emmanuel from Brookvest, really interesting ideas about how to pull this together. Matt and Faisal. With that, I will pass over to them, to Faisal, to kick us off. Thanks.
Thank you, John and Nick and AREF for the opportunity to speak here today. What I'd like to do before I kick off is get a sense from the audience today on who is an end user of prop tech within fund management. Just want to see the level of awareness of some of the concepts and technologies I'll be highlighting during the talk, because I'll be speaking about innovation in fund management. So don't be shy. Can I get a show of hands for people who are end users of prop tech? And by that I mean not the legacy prop tech that came about 20 years ago, which is quite rife in the industry. We're talking about next generation technology, and I'll give you examples of some of those. So we're getting a show of hands right there. So, and I'm sorry for the people in Guernsey and Jersey, we can't participate in this way, but what I'd like to do is talk through a bit about my own background and give you a sense of the lens from which I'm coming at this. And then we'll go into the actual tangible examples of innovation happening within fund management, some of the next generation technologies. So a bit about my background. I graduated in '99 at UCLA. I was in California at the time during the first .com boom and bust. I spent a couple of years working in technology consulting at a corporate, then ran a startup for a couple of years and ended up here in the UK in 2008 at Oxford. got lucky, got a full scholarship, and that's how I ended up coming to the UK. Graduated in 2009, right in the midst of the financial crisis, and what I realized was that we were in the middle of a crisis that had its origins in real estate. And what that meant for me was that, I mean, what I was seeing around me was quite a bit of change and churn in the sector. There were companies being restructured, there were layoffs, there were spin-outs, new businesses were being formed. So the way I looked at it, it was a once-in-a-generation opportunity to set out my stall as an investor in new real estate businesses, which I think has served me well. In 2011, I made my first investment here in the UK, a real estate investment management business, so very relevant to the audience here today. These were two guys who had spun out of their previous roles and wanted to set up a real estate fund management business, essentially, to deploy about £1 billion of capital over the next 5 years. So fast forward 5-6 years now, the business 90 North has about $1.5 billion assets under management across the UK, Europe, US, and we've just opened up an office in Sydney as well. So very much with ambitions to be a global investment manager and targeting a 5 billion AUM over the next couple of years. So I continued down this theme in 2012, invested in a different, very different business, but continuing down the theme of property businesses. Invested in a business called Accouter, which supplies furniture to developers like Barratt's and Barclay Homes, which has benefited quite significantly from the boom in residential construction in and around London. In 2013, I started to get curious about some of the digital innovation happening in and around property. So led the first investment of a UK online estate agent. This is before Purple Bricks came along in 2013. So that was a business called eMove. Followed that up in 2014 with the first investment in a online online commercial brokerage called Hubble, and in 2015 in the first investment in an online mortgage broker called Trussell. Off the back of these investments, realized that we were getting inundated with business plans, both from prop tech propositions, a whole kind of sector that was exploding, as well as conventional property businesses that were being set up. So it made sense to set up two different platforms almost simultaneously. So we set up Pi Labs, which stands for Property Innovation Labs, to invest in the innovation happening in the property sector, and Spire Ventures to invest in conventional businesses emerging in property. In 2017, I started to look into property management and new models that were emerging. So almost back-to-back invested in Ask Porter, which is actually a Pi Labs company, but I personally invested as well, which is an artificial intelligence property management platform, and invested in Pod, which is a conventional property manager. 2018 has been a pretty fun ride. It's just been 3 months and quite a bit happening. Through Pi Labs, we've invested in 5 new prop tech businesses, which I'll talk about today. And we've also invested in a new real estate investment management business, which aims to deploy around £1 billion over the next couple of years, focusing on a UK value-add strategy. The founders are here today. So a lot of the companies that I've mentioned, the founders are actually here, and I'll be happy to introduce you afterwards. So I think what we're doing at Pi Labs is very relevant for the discussion today, and I'd like to talk a little bit about the platform and what we're doing. We'll kind of dive into the relevant technologies related to fund management. So for those of you who don't know Pi Labs, we've been covered quite a bit in the conventional media. We're a venture capital platform focusing on prop tech businesses at seed stage, pre-seed, seed extension. We're a pre-Series A fund, and we're currently investing out of our second fund, which we raised last year. We have partners like the Pressbury Group, Varde, which is a US company, and so we're very lucky to have some institutional partners on board this fund. We've invested in about 30 companies through this platform in the last 2.5 years, so the team has been very busy. We have around 66 founders that we've backed, around 200 or so jobs created through the portfolio companies, And one of the metrics that we track quite closely is that around 80% of companies that we've invested in have received follow-on investment, which is, I think, important third-party validation for the businesses we get involved with. And one that I'm quite proud of for our accelerator program, for every 50 business plans that we receive, we accept one, so it's quite selective, not easy to get in, but there's also so much happening in this space, and it's not easy sifting through them. Quick snapshot of our portfolio. We cut across both commercial prop tech, residential prop tech, fintech, and a number of related services, and I'm going to kind of deep dive into specific examples now. So what I'd like to focus on today is innovation in fund management. And as you can see from this slide, these are some of the major players in the industry. This is a big and old industry. You have Brookfield, that was founded in 1899 with AUM of 153 billion euros. Blackstone, a much younger firm, but kind of not far behind with 91 billion euros AUM. So a big industry, but our view is that innovation is coming to the sector, and the easiest way to get our heads around the innovation that the fund management industry will experience is to break down a real estate transaction into its sample components. So a very simple flow chart here, from deal sourcing all the way through to exit, with either the negotiation, execution, asset management in the middle. And what I'd like to do is give a couple of tangible examples across each one of these steps that occurs in the real estate private equity life cycle. Starting with deal sourcing, we have I'll be sharing a couple of examples. Not all of them will be businesses we've invested in, but naturally we know our business is the best, so kind of easier to talk about them. This is one of our earlier investments. It's a business called Land Insight. It brings together big data and property and allows principals and investors and land buyers to make informed decisions about investing in land. So there are hundreds of data sets about land out there in the UK, including planning data, ownership data, pricing data, spatial data, maps. This tool amalgamates all those data sources and through a very easy to use interface allows land buyers and investors to make informed and quick decisions. It also helps to originate new property opportunities using the various big data tools that are on offer. I'm going to zip through some of these and this is really a tip of the iceberg presentation across each one of these steps. We have a business that we've recently invested in through Pi Labs called Appraised. This is what I would call next generation property appraisals. So many of us who are in development will have spent hours and hours on development appraisals. I know I myself have, and the vision of the founders and the team here is to create a cloud-based tool that allows you to start an appraisal, let's say on the train ride home on your mobile phone, and then get home and finish it up on your laptop. So it works across different devices and it cuts the time that it takes to put together a development appraisal quite significantly, and also allows you to share the appraisals with the various stakeholders involved in a development transaction, including developers themselves, lenders, investors, surveyors, and the actual debt brokers as well. I think Emmanuel will be talking quite a bit about the fintech innovations that are happening on the financing side of property, both debt and equity financing. There are a number of very interesting technologies emerging in this part of the transaction chain. The one that I'd like to kind of highlight is related to cryptocurrency. I know when people see this slide, for a lot of people it creates unease and angst, because it's, people wonder, what is this parallel universe that we don't understand? And I have to be frank, I kind of feel the same way. But we've invested in a business just this year called PropCoin. PropCoin aims to be a end-to-end real estate investment manager, but aims to actually raise capital through cryptocurrency markets as opposed to conventional capital markets. So on one hand, it allows holders of cryptocurrency to get exposure to real estate, and on the other hand, it enables a completely different path to raising capital than conventional fund managers would have. We've got a very smart team here. I think some of them, I think Peter Bird might be here tonight, the founder of this business, ex-JLL team, know the property side really well. They understand cryptocurrencies far better than we do, and we're very excited about the prospects for this business. Negotiation is one of those areas that I feel will probably be least likely disrupted through some kind of digital innovation. We think that human relationships, trust, goodwill, and making concessions is a very important part of getting deals over the line, and we feel that it's highly unlikely that some tech is going to come along and take this part and take over this part. But I could be proven wrong, and some new negotiating AI comes along and automates this segment as well, but I sincerely doubt it. As we all know, in the fund management world, a deal isn't done until it's exchanged and completed. And there's a number of technologies, some of which are blockchain backed, and blockchain is the underlying technology of cryptocurrencies that will make transactions more efficient, more transparent, and will reduce the time that it takes to get transactions over the line. I think what's worth noting for this presentation, and some of you might not know this, is that just last year, the first property transaction in the world that we know of exchanged and completed using a blockchain. It wasn't a large transaction, it was just a $60,000 flat, and it didn't occur in some mainstream real estate market. It wasn't in London, Los Angeles, or New York. This was in Kiev, Ukraine. But despite that, we think that this is a precedent, and it is a minimum viable product, and probably sets the foundation stone for more transactions to be completed on a blockchain. I think it's quite apparent that it takes about 6 months to get a deal done over the line, get it through legals, get a deal completed, and it takes about 6 months to exit as well. The vast amount of time spent in fund management is during the asset management period, right? So depending on your business plan period, whether it's 3, 5, or 7 years, this is not for core and core plus, but for other strategies. This is where the part of the transaction cycle that is most operationally intensive. And we think this is where the low-hanging fruit for a lot of the new prop tech applications lie, making it more efficient, cutting costs, allowing asset managers to free up their time to focus on some of the more strategic areas. So one of our investments called Ask Porter, which I mentioned earlier, is an artificial intelligence platform that aims to really handle about 80% of the inquiries that are emerging in the asset management phase, so that the managers are left focusing on more strategic aspects. It's an early stage business. We'll see where it goes, but we really do believe that AI has a role to play within property and asset management. We get asked quite a bit whether there's going to be a purple bricks for commercial property. I don't think there will. I may be wrong. I think that traditional brokers like CBRE will continue to be dominant in the sales brokerage part of a transaction. But I do think that there is a long tail of small transactions, the sub £5 million commercial transactions, that probably are well suited for an online platform. And there is precedent in the US, a company called 10X Commercial, which has transacted nearly $20 billion of commercial property online. So we haven't seen a major player here in the US, in the UK, but I wouldn't be surprised if a few start to emerge in the next year or so. So here we are, the full life cycle of real estate private equity, from deal sourcing to exit, and a couple of tangible examples. I hope that some of these examples have demonstrated that prop tech in fund management isn't just a pipe dream, but that there are tangible and practical uses for some of the next generation technologies that are coming about. And hopefully, in a year or 2 years' time, if we're speaking here again and we get a show of hands from the audience, I would hope that a lot more of you would have raised your hands and said, actually, I've used these before. I'll leave you with this rather cryptic message from Silicon Valley. Software is eating the world. The way we interpret it is that, particularly in the context of fund management, there are technologies and digital innovation that is emerging across the transaction lifecycle, from origination through to exit and every step along the way. For the most part, these technologies will be enabling, and they will empower the stakeholders in real estate, the principals as well as the advisors, to do their jobs better, to be better at what they do, to be more efficient, and will bring about transparency. But I think that with the advent of AI, we would be foolish to think that some of these technologies won't bring about what researchers refer to as creative destruction. I think there will be a little bit of disruption that happens along the way. So I'll leave you with this quote: software is eating the world, and I'll leave it to you to interpret as you wish. Thank you very much, and I'll hand over to Emmanuel from Breakfast.
Good morning, everyone. So I'm the founder and CEO of Breakfast. It's a startups and a fund manager. So actually, and we're disrupting in the real estate investment management business. So like before, I like to come with my story. So and why I did Breakfast and why it's relevant for today. I started my career out of a French business school as an investment banker in the technology team of Salomon Brothers 20 years ago, and I write the first very disruptive technology practice, mostly on telecom, and actually telecom was the big elephant like real estate who got disrupted 20 years ago, and within 20 years we went from BT to broadband to Wi-Fi to the GAFA, and then software. But that industry pretty much resemble of the real estate investment or the real estate tout court. I was there, I did a lot of deals, no comparables, young, learn a lot, and but lots of those business models could not, I would say, take off because there were no infrastructure. We didn't have device, we didn't have similar, I would say, practices. So now everybody in the room has this, everything thinks the cloud, and everybody is connected, which allow the business model that we thought 20 years ago now to take off. And then obviously we have people like PyLab who are actually investing in those. But most of the idea that we're talking today actually worked myself on IPO of those business 20 years ago. By accident, I completely moved. The tech guys went into real estate. So if you ask in the room, I don't know who have been in tech before, but a lot of my colleagues from tech went straight into real estate because real estate was the things to do in 2000 and 2001. And I moved into the real estate desk of Citigroup, which was the same company. And as you know, Citigroup was the first global bank and obviously one of the major innovators. If you wanted a big deal as private equity, you needed Citigroup because Citigroup had the low cost of capital of the innovation. So done a lot of CMBS, sell and lease back. Obviously very hot, the whole team went into Merrill Lynch. So I did the first property derivatives in continental Europe. A lot of pan-European deals with the euro. So doing even, we were the first doing our own data room, online data room, to do 15 countries at the same time, where people couldn't do that because we had tech people who could do it as investment bankers. And then I moved to Goldman Sachs, where Goldman Sachs has more of a business of a hedge fund investing in property. So I've done that till the financial crisis. And after the financial crisis, well, maybe I should do something for myself because I've been very good at learning and always getting on the challenge. And I moved into the first, I would say, the big prop tech business, which was integrated technology into property, which with Masdar City, which is the first eco-city on the planet, which was how to build an ecosystem of buildings, which is zero carbon, zero waste. We talk a lot about innovation, but we actually don't do much. Or with the urban planners or the people who give us the rules to innovate against, don't let us innovate. And that's the problem of that industry. But in some other part of the world, we actually innovate a lot. And I was head of investment or the first 25 billion prototype of an eco-city, which on one side I had to manage the money, and the other had 150 technology roadmaps with a lot of patents. And I was making the trade-off, oops, a lot of tech, but actually what matters is the return on investment. So, and I've done that. That was interesting, but obviously that's not an investment market. That's for someone else. So I decided to do it in Europe. And with the financial crisis, I couldn't actually do eco-city projects, so I came back to what I know best, which is doing finance. And by accident, as an entrepreneur, we set up a hedge fund, because it's quite easy to raise money on a hedge fund with a trader, and it's more difficult to raise money on the property fund. And I learned what hedge fund has been doing for the last 15 years, which I think we need to learn a lot, because that's the same LP. And we raised 500 million on the back of offering more transparency, more liquidity, not automatically alpha, but enhanced beta. And investor wanted it, especially after the financial crisis. Also, because we listened to our investors, we set up a tech fund. We invested in the pre-IPO tech trade. Like I'm sure you heard of those Facebook shares. And we raised 200 or 300 million on the back of that, not as a seed, but pre-IPO tech fund. And I invested some significant money in technology companies in Silicon Valley, including being the secondary market fund of Twitter before IPO. So I say you this is because also I've been an investor. I've been obviously a user of the industry we live in, from a banker, from private equity, and I accumulated a lot of things. Obviously, being part of an American firm, we were, and also I'm a marathon runner, so I like athletes and I like championships. So if I run faster, we were making a lot of money. But I realized the people in Silicon Valley were less about themselves, but more about trying to share open platforms so everybody could be the champion. And that's how actually we decided to create Brickvest. Having an open platform where people could plug and basically enhance their alpha with us in the investment management world. So I give you this is because I've been in everybody's shoes, and I'm trying to, Brickvest was basically the platform I would have loved to get the last 15 years. So we created for ourselves, and we're trying to use as a user. So first thing, you know that industry. That industry is incredibly gated, disconnected, and for good reason. It's because it's complicated on the asset side, and on the asset side, you have a lot of assets, but not a lot of assets are investable for the people who could invest in it. It's gated by a series of people, and people think assets, think buildings, think emotions, where on the other side, investors think strategies, think risk. So we're always between the two. Because they gate each other, there is kind of this ecosystem that had a balance, but actually it's against disruption in a way. It's mostly illiquid, complex, opaque, and because it's illiquid, complex, opaque, well, this is our world with our rules. On the investment side, obviously this is regulated. People want more safety, transparency, analytics, choice, advice, independence, governance, which in itself is it's almost the opposite of the other industry. They're just two industries living together, want to invest together, but actually have putting together an ecosystem of a lot of human gatekeepers. I mean, that's the industry. And that industry was the same for shares 20 years ago, commodities 20 years ago. And that industry now, if you are an equity traders, you need to have an algorithm. You need to do volume. You have exchange. The industry have changed a lot. Commodity have changed a lot, but property has not. But they're the same circle. And that I have lived myself. I've been the last 20 years, I've been either working with the asset allocation, the product distributor, the structurers, and of course the bank are very good at structuring everything that an investor wants, and then the broker into the world of real estate, which have their own advisor, independent, and all of that make real estate investments. So when we talk about disruption, we need to understand the ecosystem, because that ecosystem has created the trust of real estate investments. And without the trust, there is no system. So when you disrupt, either you need to enhance rather than, or innovate, but in a low risk manner rather than trying to shake. And that's, I think, one of the problems of real estate is difficult to shake because they don't want to break the trust. Obviously, we talked just before, people are starting to try to shake it. So either what we call on the fintech, which was mostly investor taking back control, right? Give me more products. Can I invest directly? I don't have 50 million to invest in the deal, but can I invest 1 million? Just aggregation of capital or distribution. So that's mostly the peer-to-peer, which was the little guys trying to get into the big guy deals when the big guy deals was letting them invest. But with a financial crisis where illiquidity, when there is no bubble, then yes, maybe there is a pricing element, and we've seen that. So it's mainly distribution and banking. We think on PropTech, which we talked about, yes, we work for changing completely the industry how we're thinking, but that's more on the asset side, or tenants or listing. That's not really real estate investment, but if you want to underwrite a real estate business, you need to understand what's going on there. And then RegTech, which is mostly the thing we don't talk about, but regulation destroy or make innovation. And one of the big game changer after basically Lehman Brothers, for instance, in Europe, we have new rules, IFMD, MiFID II, which basically are changing the way we do business. Either we take it as a constraint or we're taking it as an opportunity to create new business model. And that's the way I looked at it. I put this because, and that was one of my, so we decided to be a tech-based real estate investment management platform. And then we went to either a family office to raise money as a seed or tech. So tech, actually the tech family office or VC wanted to support us. They didn't quite understand automatically the ins and outs of the whole business model. We got money, but very quickly they stopped investing. And when we did our Series A, actually VC didn't really understand, and then most importantly, they didn't understand that, which if you don't get regulation right, you don't get your business plan right. You can't scale. And we saw that at least on the prop tech of the fintech business in the United States, you have people like Realty Moguls, or they have basically, there is always a gap, because in the US, and up to 100 million, there is an exception of exclusion of the regulation for asset investment management for less than 100 million. In Europe, it's from the first dollar. So in the US, people were innovative, but they can't scale, where in Europe, it's quite heavy, and it's too expensive to get in. And so obviously in property, we're talking a lot about AFMD, and I'm sure in this room everybody knows. We see it as a great opportunity, and that's a need of the market. MiFID II, and credit rating agency, which actually came into place last year, which to invest better, you need better data, and the data that people trust, we believe, are the regulated rating. And then in the United States, it's even more complicated because you've got a lot of different rules, and then you've got gaps, and it's almost a nightmare. But if you get it right, actually you can help either the real estate or the investors to get into the new industry. So we spend a lot of time on our side to try to link the institutional real estate, which are mostly in the US and Europe, to the investors that likes it and understand the rules, which are the American and European. Yes, we could talk about Asia, but the problem with Asia is each country has its own rules, so it's making it very, very difficult to get in. The regulation as disruption, so that I think, I mean, I can talk a lot about that, but IFMD is creating a big disruption into how you market your deals, how you market your funds, even if you don't want to close the fund or if you don't want, just test the market. Investment distribution, governance, money laundering, and a lot of real estate fund manager, not the big one, but the mid-size, most of them started from property. They went from asset manager to fund manager, and sometimes were integrated. IFMD make it very difficult. You have to choose what is your core business. What is your core business? Creating real estate alpha or creating fund management alpha? And actually, you can't do both automatically. There is a conflict of interest. And that's what disruption forces you to do, to think about what your core business is. And MiFID II, who came into place on the 1st of January, it's a lot of things about secondary market, especially if it's traded, transparency, order reporting, and lastly, the big elephant in the room, which we realized, actually, there is Brexit, passporting, single market, and actually there is a separate layer we didn't know, and we build our business model across Europe, thinking everything was flowing, but actually regulation has a big impact. So we do a lot of that at Brookvest. The regulatory paradox is our industry have decided after the introduction of all of that, mostly to restrict their business model to be outside regulation. So property guys trying to do managed account or joint venture so that they can exclude themselves from the regulatory burden. But actually, this is not going away. It's going to eat everything. So software is eating everything, but regulation is about to eat everything as well. We learned a few things. So I just put at the bottom what are the changing, but it's happening. You know, robot advisor, online distribution, click execution, deal listing, risk allocation. And from our perspective, there is only disruption when it can be scalable, when you have more than one client who wants your solution. So most of the platform have been doing one product, one client, which is at the bottom, which is single closed platform. They're basically property asset manager with a website. Okay, so that's basically, but actually with one property, and it won't automatically sort out the problem of the investors who want to have a lot of different strategies. And for us, the disruption happened when you basically, we create pretty much a managed account platform for real estate strategy for a wide range of investors. So that's where we want to be. So I'm going to talk a little bit, and I don't know how much time I've got now, but about what we do. So instead of being a fund manager in tech, and that's a great, actually, in the ecosystem, you need people to support the innovators. But I decided in this part of my life no longer to be a tech investor, which I've been, or real estate banker and advisor, which have been, but try to make it happen. So when I go to customers, they said, we make it tomorrow, rather than we might make it and let's build it together. So BrickVest is happening, it's live, and we do what we do. And I will just show you what we've done in a year. So at the beginning, and we started really from to be credible, we need to be like our customers. So we decided to make the most difficult thing, which is having an online distribution platform for fund across Europe with AIFMD proof, difficult. And try to deal with all those regulators and do it low cost and using technology to go faster, quicker, and less expensive. We also wanted to change a little bit the dynamic, which was we let everybody in. So either give me a piece of an asset or give me a piece of a fund, or we can distribute your fund. So more of an idea of everybody could be our clients rather than I'm competing with my client, which sometimes you see those online players are competing with the offline players. So how to innovate and how to create value. We see two main stakeholders, or two main clients, which are the sponsors, so the real estate alpha, the people on the ground, and the investors and their advisors. But the main one are the sponsors and investors. And all of them are different needs and different problems. We invest, my hedge fund I had before was Quant, so we use tech for ourselves. So we do our own software, we use Quant Analytics, and we even have a patent of blockchain-based marketplace in the United States. So we believe in the benefit of technology, and the result is not technology, is actually a better service. That's the way we look at it, although some of our shareholders want us to start doing some technology solution for them. The statistics is 4,000 in members, so the basic investors have done KYC ML with 10 billion of assets, and we have given them access or exposure to strategy of 2.1 billion, and we have transacted 71 million either as a deal listing, distribution, and we started doing a secondary market. So what was interesting for me was, because I work in those complex organizations, real estate is an asset, but actually people want to invest in a security most of the time. So even if the asset is illiquid, we could have liquid securities, and some of the funds are listed here. But when you look at what happened on commodities or derivatives, if you plug those two together, we can actually, as an industry, have much more flexibilities in terms of capital raising or even liquidity. So for me, was really how to make what the commodity world have been doing by trying to create this platform where we could have synthetic or not synthetic secondary market or distributions. We also a fund manager, so we launched successfully 5 funds, AIFMD, distributed across Europe. So we know what we can do.
Real estate is arguably the largest asset class in the world, yet most investors are restricted from accessing it due to costly gatekeeper dynamics. To date, direct investing was accessible only to the wealthiest individuals and institutions due to the large minimum investment amounts. The alternative, namely indirect real estate investment funds, entailed high fees and low levels of transparency. At Brickfest, we make it simple to invest in real estate and require low minimum investment amounts. Brickfest is a real estate investment platform that provides sophisticated investors the opportunity to access global institutional-grade deals from a simple online portal. We enable investors to get their slice of a pre-vetted London hotel or their share of a Berlin office building, all from one single online dashboard instantly. Beyond simply giving investors access to opportunities, we aim to transform tangible real estate assets into risk-rated products. We also aim to improve real estate liquidity by creating an online secondary market where investors can sell their existing investments to one another. Our online platform offers investors a full spectrum of investment management services, including global sourcing, thorough due diligence, proprietary in-house rating analytics, and ongoing monitoring and reporting. By investing in different geographies and asset types, you can gradually build your own diversified portfolio based on your risk appetite and return objectives. Register online for access to our full range of investment opportunities and start building your own Brickfest real estate portfolio.
So, this hashtag, of course, that's what we learned when doing fintech. This is our retail platform, which basically allow us to test. Because when you have 4,000 LPs, you have to do things better than 5 or 10. What we learn out of it is a lot of people came to us and say, oh, I like this bit, I like this bit, I like this bit, I like this bit. And this year we decided to change ourselves into a solution platform rather than a online crowdfunding platform. So that was last year. We carry on doing it. A lot of people still want us, but actually we're moving into more providing services or a piece of what we've done well to the rest of the industry. All of this deck will be available to you so you can see. This is the statistics. What I can say at the end. I put things about our technology strategy or marketing strategy on eBay. So I'm happy when people are interested or even have other questions. My conclusion, because I've got one too. So the idea was to create a flexible open source. So it's more like anybody in real estate investment should be able to be helped rather than thinking lonely. I'm an alpha guy's investment manager, and with regulation or even the carry or the performance, it's very difficult to share and be a team. So the idea was to create this platform where people can come at the life cycle of their investments. Software is coming. There is no way. So if you want to run fast, and we're going to run fast, look at what happened on the security trading or WeWork. You have to engage and you have to change make your technology proof or future proofing your business model by adapting. And we're talking about in the industry, first is how to digitalize your process, so know your process, rather than giving to a compliance officer who just make process but you're not involved. Your software will create data, so be smarter, so be algorithmic or whatever. And yes, use things which are more safer, secure, audit, and that's the reason why we love blockchain, because it's secure and the auditors, we can show, look, we really do what we're supposed to do, which most of the time we don't know if we've done the policies because someone has to have the proof of that. Artificial intelligence is if it works, but people should have a view on that. In our world, it's all about safety. So it's going to be more safe. I've got my views on the blockchain as a currency, because actually on money laundering is a big issue. So these two worlds have not connected yet, and Europe may actually shut it down, or China or others. And you need to future-proof, not locking in the past your business model, which is difficult where the industry is doing so well. So we're doing so well, there is so much money in the industry. What do I need to, I'm 40, 50, 60, I still have 5 years. The next generation will do it, but because the cycle or the people around the room are not automatically letting new blood, it's new generation going to do it. So we may be disrupted by someone which is not in this room. And WeWork is a good example of that. My key takeaway is this is just the beginning. Real estate is actually one of the biggest assets. So this is a big 800-pound gorilla to be disrupted. What is interesting with real estate is that the other people outside don't know how to tackle it. We have our own language, we have our own ways, and we're very good at protecting our market. So it has been getting so well that disruption have not been coming from outside. But the incumbent and asset owner should stop thinking is about yield. There is about other things like risk. So having those two worlds communicating to each other. And in my perspective, the best way to predict the future was to create it. So I put 3 years of my life to try to create something. I don't know if I'm going to make money, but at least I'm having fun. And I'm actually providing solutions to problems that everybody has. So we were.
Morning, guys. Can everyone hear me? I feel like I'm going to rue telling Claire I didn't want the lapel mic, but hopefully this will work. Well, thanks, guys. That's two really interesting speeches. I sort of actually didn't know too much about it, despite working for an 800-pound gorilla. I feel like I got a bit to pick up there, but I'm going to focus on WeWork. I'm sure everyone in the room has a view on WeWork. It's fair to say, right? How many people? Let me go through this. My slides are just pictures, by the way. They're just pictures of office space. There's not a lot that I really want to visually stimulate you with. I'd actually rather you listen to what I have to say. As I said, everyone probably has a view on WeWork. Just in this room, once again, excluding the people who are sort of linked up with us live, how many people here have been inside a WeWork? Oh, I can leave. I mean, that's excellent. I think a lot of people, when I first took the job, and just by the way, my background is I'm the head of Western Europe acquisitions for WeWork, which includes that famous part of Western Europe, Australia and New Zealand. Hence my winter tan. I've been running around there the last couple of weeks sorting things out. My background is effectively I was an agent. I worked at Jones Lang LaSalle, and then I'm here now. When I first took the job at WeWork, we had about 3 buildings in London, and we came into the market and we said, we're going to do this, and we're going to grow, and we're going to have X million square feet, and everybody's going to want to be part of our platform. And probably a lot of your colleagues at the transactional side of the business quite firmly closed the door in our faces. There has been, if you've seen an FT article recently, which now says we are the largest private tenant in London. So behind the government, obviously, it occupies a lot of space. So the last 2 and a bit years have been a pretty successful, yet still a roller coaster ride for me. I think when I was first trying to express to people what WeWork was, I think part of the issue I had with attraction was, even myself, I was still explaining it within the frame of reference as a serviced office business. And I think then when you immediately start down that track, everyone benchmarks you against particular serviced office businesses that have come before. Over time, as I've spoken to more people, I've learned to really take a step back, and that's what I want to do in the room here. When Jeff Bezos first started Amazon, and you've all seen that famous photo of him that went viral recently, sitting in his little office with his Amazon sign up. That was actually in a serviced office, by the way, so there you go. He didn't go to the markets and say, I'm going to create this ubiquitous platform that you can buy this and that, and I'm going to do TV, and I'm going to do everything. He didn't do that because he wouldn't have got the traction. What he took was something very simple, which was selling books. And bookshops can sell books, and he said, that's a simple thing that I can do online, and I can do it better. And he had a better selection of books than you can get in a bookshop. You could order the book to your house or to your grand's house if it was her birthday with a little birthday note on it. If there was any issues with deliveries, it was taken care of. Then when you started going online, based on the previous books you'd ordered, he would use the data to recommend other books you might want to read. Then he was a very early adopter of the audiobooks, of the Kindle. So now when you were on your sunbed on holiday and you wanted to get a new book, you didn't have to go and try and buy it from the newsagents or whatever you could find there. You could just download it. He innovated the consumption of literature. He made it so easy that more and more people were doing it. Once he'd done that, he created a marketplace. People would go to Amazon. He created a marketplace with excellent brand equity. After that, he just bolted on the products. I'd get a mortgage from Amazon if I could now. I believe that guy. I believe that whatever Amazon are going to sell, they're going to deliver to a level of execution that I want. we're not a serviced office. We are a community platform. That platform is set up so all the members of that platform, it enables them to achieve success in their lives. Success can be business success, it can be personal success. If you come to some of our parties, it can be romantic success. The real estate is a gateway to that platform. You could argue the real estate is entirely ancillary to our business. Of course, you're all real estate people. That's what you see. What's WeWork? Oh, it's an office. That's granted, we could have had some better pictures, but you all know what a WeWork is. It's wood floors, it's trendy couches, it's music, it's beer taps, it's bring your dogs in. That's the physical experience of a WeWork. But that's not what the business is. And that's what I really want to open your eyes slightly to understand where we're at today with the business and also why we have the plans that we have. So let's take what I would call level 1 of the business. For sure, I rent desks. I rent desks monthly. Amazon still sells books. I sell desks, and I will always sell desks. From a real estate level, we do have competitors. I can't make a month any more flexible than the next company. What I can do is excel in the execution of the operations of that real estate. So when you come to a WeWork, it's treated like leisure or a hospitality business. As you walk through that door, your experience as you're greeted is going to be better than when you probably go back and walk through the reception doors of your current companies that you work for. Unless anyone sitting here is the CEO, then they get the hi, Mr. or Mrs. So-and-so, would you like a cup of tea? The rest of us barely get a smile from the slightly harassed person on reception. Come to a WeWork, you don't get that experience. You come in, your Wi-Fi connects automatically. You have an app, you can book meeting rooms, you can find out who's in the space, you can find out what events are happening that day. The offices are built out to an incredibly amazing architectural standard. We've built 13 million square feet of offices. We know more about workspace, how to build it, how to curate the events, how to increase collision points than anyone. A bit like what the guys were saying earlier, data is everything to us. We collect huge amounts of data on how people are using our space, and that enables us to reiterate the product again and again and again. So as we're building our new WeWorks, every single one is a better physical experience from the members than the last one. We take that extremely seriously. Level 2 of our business, and the truth is, I don't know why our competitors don't do level 2. I feel like that's possibly achievable, but as far as I'm aware, they don't, is that we have over 200,000 members spread across over 20 countries, over 65 cities, in over 215 physical locations. That gives us the collective power of a very, very large corporate company. On behalf of our members, we go and negotiate pension benefits, medical benefits, gym benefits, whatever it may be. And if you or I are running a 1 or a 2 or a 3-person company, we don't have to go to the market and pay retail prices. I simply get on my WeWork app, I go to the We Services page, and I select what I want. Easy as that. That makes a huge, huge difference when you're a small company and you're in the grind and you're pedaling. To feel that you get treated like something bigger than what you are is extremely important. The third layer of our business is the community. If you don't get this, then maybe you'll never understand WeWork, because the community is everything. Now, this was really brought home to me recently. I actually wasn't sure I was going to be able to be here today because I went to Dublin on Tuesday for a day trip, for a work trip, and I got back yesterday. So I've been snowed in Dublin for the last 6 days. As I sat there in my hotel, there was a red alert, weather warning, red alert. Believe it or not, all the pubs in Dublin were shut, which, that's more than a red alert. Everything was shut down. There was no way out. There was power cuts across the city, including in my hotel. Nothing was open. The TV aerial had blown off the roof. The Wi-Fi was intermittent. I mean, this was horrific for some of the Americans who were sharing my hotel. Us Europeans are perhaps more able to adapt. Now, what I found was, around where I was in this hotel, the staff had all still come to work. I mean, they didn't have much power, and I don't think the chef had come to work because the only thing you could order was cheese toasties, and it seemed to be being made by one of the receptionists. But it wasn't too bad actually. And then there was a coffee shop round the corner, and that was still open. And there was one taxi driver who was driving people who were trapped in the hotel in and out to their locations, and it was very, very stormy and wet weather. And I had the opportunity to speak to all these people. I would sit in our lounge and we'd drink endless cups of tea. You know, when you're English and you're in a crisis, we were just drinking cups of tea. And I was chatting to the staff, and I was like, oh, you've done well. You've managed to come to work. No one else has. And they said, well, you know, like, we have a lot of regular guests, and this hotel has a very good reputation. Like, it's important to us. I was chatting to the person in the coffee shop. I said, oh, you've done well to come to work. You know, everywhere else is shut. And they said, well, we're near the hotel. We get a lot of people coming here. They expect us to be open. You know, we made the effort. And then when the taxi driver finally took me weeping to the airport with glee that I was leaving, I said, how come you've been working? He says, oh, well, listen, I'm a regular driver for the hotel. I didn't want to let them down. You know, I know how important their staff is, sorry, their guests are to them. And it got me thinking. In the midst of this little snowstorm, there we were, and we created this little community. And every single person in that community felt part of something bigger than themselves. I didn't stay in my room. I could have done. You know, I had a Kindle, so thanks Jeff Bezos. But I didn't. I went downstairs. I went to the communal area. I wanted to speak to people. I wanted to understand why people were in Dublin. How did they feel about being trapped here? What was their experience? How were they getting home? That's a very, very tribal way to feel. And that's what it's like in a WeWork. When you're in a WeWork and you're part of a community, you feel part of something. On our app, our members speak to each other. And that's not, hi, how are you doing? Let's meet for a beer later, albeit we do have beer. That's, I need help with my accounts. I need a patent attorney. I need this, I need that. 70% of our members are doing business with each other. Real business. There is a huge competitive advantage to being a member of WeWork. A lot of these things used to be typed into Google. Now they're being typed into our app. And because we create events every night, some of them serious, some of them are pub quizzes, people get to know each other. You know the people on your floor. How many of you know the people? If you live in an apartment building, do you know your neighbors? You live on a street, do you know your neighbors? Or you're all just alone with everybody? Because that's how the world is feeling. Everyone's connected, everyone's disconnected. Yeah, you come to a WeWork, it doesn't matter if you work for a corporate company or if you're working for yourself. The chances are, because of what we've curated, whether it's physical, whether it's through events, or whatever it needs to be, you've had a collision point and you've met with other people. That's really, really important. I work for, I just realized I've said my previous company's name. I feel bad now telling this story, but I work for a company. There was a light that flickered above my desk every day for 2 years. I couldn't get it fixed. I asked the building manager, my company, everything. It never got fixed. I actually didn't leave the company because of the light, but I left. I didn't feel good about that. You know, I was there. I was working hard. I was really trying my best, and I couldn't get a light fixed. You're in a WeWork, and your light doesn't work, or your air conditioning is too cold, or too, you know, everyone has that person that's always too cold or too hot. You go on the app. Through our Zendesk, an engineer will be with you in half an hour. And then once it's fixed your problem, one of our community staff will come and check to see if you're okay. It makes you feel good. It makes you feel that somebody cares about you. You're not all landlords, but you all work for people largely that are landlords. A landlord sits here and he builds these amazing buildings and he's super proud of himself and he lets it to a tenant. And he appeals to that CEO, that CFO, maybe HR if they're feeling 21st century. But they don't have control over how that tenant treats that end user. okay? We're all users of real estate. We all sit down here. We've all had that flickering light, that broken air conditioning. All my company does is we care about the user. And whether that means that you feel good because you can bring your dog to work, you can have free beer, you can take part in a quiz night, you can do coding on a lunchtime, you work for a corporate bank that takes space with us, because a lot of them do now, because they realize that actually millennials are greedy. They want to work in an environment that's more than just a gray cubicle. But you still may work in this large corporate company. But when you go to the kitchen for a coffee or whatever it is, you find someone that's taking control of their lives, that's set up their own business. Maybe you're going to get inspired by that person. They're an incredible place to be. If you've ever been inside a WeWork, you will feel the energy is different than the current offices I bet you're all going back to. And if you haven't been inside a WeWork, we're always more than welcome. So we always want to bring people through because we're incredibly proud of it. I've just had the dreaded 5-minute flag waved at me. So I should say that in terms of our growth, we're going to continue to expand. I have more demand than I have supply. I have more corporate clients who are realizing they want to treat their users better and they want to put them inside a WeWork. We have WeWorks in Dublin. In the height of the snowstorm, I wandered down to the WeWork just to see. Truthfully, it was the opening day. I wasn't expecting much. There was no power. There was no heat. There was no Wi-Fi. But it was full of all the new members who, for whatever reason, had come out of the snow, and our community manager had brought flasks of coffee from home, and they didn't have any cheese toasted sandwiches. On reflection, I should have bought them. But the beer taps were working. And we sat there in the snowdrifts, and I reflected on it, and I thought, that's what it means to be part of a community, because that was a community being born that day, and that was people that wanted to come, despite the weather, despite everything, to be part of something bigger than themselves. And that sums up WeWork. That's it.
Okay, we're going to move on to questions and answers in a second. I just wanted a few quick reflections before we do that. And the first thing is, obviously, as we think about trying to do things differently and innovating, we can obviously think about how we do that at a process level. So how can we do each thing that we do better? We can think about products and coming different things to market, but also this challenge of how do you actually fundamentally change your business model and how do you do things differently in that, which is obviously much harder for people. So as we're thinking about how to change and do things differently, I think that kind of life cycle thing that Faisal sort of went through, I think that kind of way of thinking through all the different steps of the process of delivering real estate, delivering what people want when they occupy buildings, of really going through from understanding the needs, understanding what's possible, to thinking about the best ways of actually delivery and management, through to all the value-added services and all the other things which occupiers are, fundamental occupiers and users are looking for, is a really helpful way, I think, of thinking about what you can do differently. And I think there are lots of interesting things in there about how, some of that I hope you heard and you thought, well, this is a real challenge to our industry, and some of it hopefully you thought, actually, this is a real opportunity. And I think certainly that is the nature of this. I think it's very much, it's about working out what you're really best at and coming up and focusing on those areas and finding, there are opportunities going to come out of the changes we're going through, which are going to really help people, I think, focus a bit more on the things that they're best at and having to worry a little bit less about others. So with that, guys, do you want to come up and we'll start kicking off the questions? And I suppose a first question, as you're just sort of getting comfortable, is just where do you see the new jobs coming from in real estate, and what kind of skills do you see as being required in those?
Are you looking, Nick?
Yeah.
Where do I think the new skills in real estate are?
Well, exactly. What
I mean, that's an open question. I mean, I saw a stat I can't speak to its accuracy, that said, you know, in 5 years' time, like 50% of jobs don't exist currently that will exist in 5 years' time. So I truthfully don't actually have the answer to that. I'm here looking at these guys, telling me maybe they'll know.
I would say system integrators. I mean, one of the first things I realized when I was in Masdar City is to change the real environment. We need tech to be innovated into real estate, but actually the integrated of the city is the real estate. So to put tech on top of the roof, to do special services, if the landlord or if the developer have not done it, it's going to be able to, we won't have a smart building, therefore we won't have a business plan. So I think the future is all about more designing those software, which is a new innovation. And I worked, when I was there, with a new breed of architecture, which are basically tech, basically like what you find in the defense industry. And then you've got a new breed of entrepreneur on back of real estate, like we work, which are thinking real estate as a service provider rather than a rent and passive. And that's in itself a new breed of jobs. And then a lot of plug and play software, data analytics, which we already doing, maybe sometime on asset management, and we don't empower the asset management team enough, and connecting with the world, because real estate have this privilege of being a financial, an asset-backed security in a way, which we can attract a lot of money to it. So I think there is a lot of connecting to it, design, software analytics.
For those of you reading the EG, you might have seen like a full-page ad catering to property companies on how to hire a CTO. This is new. If you read EG like a year ago, you'd never see that type of ad in the Estates Gazette. So I think that kind of gives you a direction of travel of where the next jobs might be coming from. So I think you'll see property companies hiring CTOs, chief digital officers, software engineers, data scientists, roles that you would very much associate with the tech business. But now I think the real estate industry is catching on, and there are kind of forward thinkers like the Estates Gazette that are trying to curate some of that as well.
Okay, and just another question before we turn the floor. Just, do you think that the culture in real estate is more conservative than other industries that you've come across, or do you think it's...
100%. I mean, I think truthfully, I think the culture in real estate's got a lot to learn, not just in its conservatism. I think in everything. You know, I feel very fortunate that I work in a company which prides itself at being at the vanguard, not just of the sector that we work in, but also the way we go about things. And we're a company that everyone is employed on merit. And effectively, can you execute the role you've been given? Because we're in hyper growth, but we're still a startup. I think real estate to me has been stuck in the past. I think when I speak to people and new prospective landlords, and they say, "Well, I know your business, Matt. I know what you are," and they judge me on a set of metrics from a company that they first encountered in 2003. It doesn't feel appropriate to me. Truthfully, I've also been to, not me personally, for obvious reasons, but I've seen some pretty backward actions in the real estate market. Some things that I've not been that impressed by. I'm very fortunate in my team. We have a very diverse team full of excellent people, from young to old, women, men, whatever. And I think that the real estate industry has a lot to learn in a lot of facets, and we as a company are trying to push that forward ourselves.
I fully disagree. I think real estate is an industry of innovators. I mean, all cities were built by real estate. They try to cater for very demanding tenants, politicians, and society who want things all the time, while at the same time taking so many risks, and it's very risky business, and cater for debt and equity providers in an over-regulated industry. So in itself, you have to be innovative in your little fields to be able to cater this paradox, which is extremely demanding tenants or users with very conservative not because you want to be conservative, but you need the trust of your conservative money providers. And I find when I went from technology to the real estate investment banking, maybe they were the most, I would say, innovative bankers or innovative industry. And even when you look at the developers and you look at Donald Trump friends, they're all real estate, but they're also all technology investors. So they have no problem to take risk. The problem is the people who are giving them the rules to play with risk. When the rules, and we all complain in these rules about, hey, politicians can't do A, B, C. I mean, if you have rules on the A, and that we can innovate with the rules, but the rules sometimes are making the industry seems like not innovative. I think one of the points we can say we're backward sometimes is because it creates silos and it creates lack of sharing, and sometimes in silos, but in any industry, create bad habit. But actually, the industry itself, and because we're in the trust industry, the trust of our tenant, the trust of our stakeholders, the trust of our investors, we have to be innovative to create alpha while being conservative, and it's a difficult job.
I think while the culture is conservative today, it's changing. So it's changing from the bottom up and from the top down. So from bottom up, you're seeing millennials move up the corporate ladder, and many of them have roles in middle and senior management, and they very much are digital natives themselves, so starting to change the culture within the organization. And what we've seen at Pi Labs is that the corporates themselves at the board level, so from top down, are starting to very much prioritize digital innovation as a core part of their overall strategy. I think that there is a desire amongst conventional, traditional corporates, not the likes of WeWork, to have their corporate fingertips on the pulse of innovation happening in the sector. And there's a number of examples in the market. Pi Labs itself, all of our LPs practically are corporates from the or real estate, traditional real estate players in the industry who are part of us because they want to be closer to the innovation. And across the pond in the States, Fifth Wall, which is the Pi Labs equivalent, a bigger equivalent in the States, also all of their LPs are traditional players in the industry like Heinz and CBRE, etc. So I think things are definitely changing, both bottom up and top down.
Great, thank you. Questions from the floor? Okay, so question for you, Matt. Would WeWork consider the residential or shed or retail market, or will you leave that to Amazon to do fulfillment centers?
To my friend Jeff. Listen, as I said, look, it's like life. What do we do in life? We work, we live, we play, we learn. It's no secret that we are a multifaceted platform. WeWork is part of it. We have We Live arm. I won't talk too much about it. We do have 2 open We Live locations, one in Washington, one in New York on Wall Street. That's co-living. It's something that we very firmly believe in. We believe it's the way that the densification of our cities will need to address this. There's 1 billion people moving to cities by 2030, and they have to live somewhere. We have an active We Live team here in London. We're looking at a few deals, it's part of our business already. If you follow it, we've also purchased some companies in the educational sector. We've done the Flatiron School, which we'll be rolling out through our platform. And we also have a fitness brand, which is called Rise by We, which we're going to be rolling out. It's like a wellness brand as well. It's very obvious, a bit like Amazon. It's for us, once we've established the marketplace and the community, we hope to be able to address all the things that people want in their lives under our platform.
Okay. Any questions from the floor? Yeah, over there. Yeah. Go on.
Nick Wright from KPMG. Matt, you offer flexibility to your members. Given what you know about your members, what can those in the room learn about offering flexibility to their occupiers? And is there any form of dynamic pricing which you develop that we should be aware of?
I think you're right. I think a lot of our members join the platform because of that flexibility. But for us, we're also seeing that members, once they're in the platform, they're staying longer. So whilst in the first year, you may see 20% of members leave, that's because maybe they only came for a year. Maybe it's swing space, or maybe it's a project team, or whatever it may be. But in New York, which is our most stabilized market, which maybe I'll use that as a data point, of the 80% that remain, we then see less than 1% leave. Because once you're part of our platform, and your users, your employees, are benefiting from all the different things, it's amazing what happens to productivity. It's amazing what happens to sickness and turn up. And it's amazing what happens to your ability to recruit. And we have companies that now recruit saying, by the way, you'll be working in a WeWork. So flexibility may have been the hook, but then they push out their licenses. Our larger corporate clients, we call them enterprise, it sounds better. They're 30-40% of our sales now. These guys want to take 5. They want to take 7-year commitments. So actually the flexibility part of our business, we hope, whilst we will always offer it, is becoming less and less important to prospective members as they value the benefits of the platform.
And in terms of the data and some of the platform benefits, are these potentially going to be made available to other people, not in the WeWork club?
Listen, I'm well aware of the companies that are big data plays that collect data. I'm also aware of future legislation which will largely impact the ability to sell or trade data. We use the data that we collect on the way our members occupy the real estate in order for us to build out better offices. I don't think any of our members mind, we're tracking. We have a very strict couch policy, and if a couch isn't used regularly enough, that we change that couch. As for the other data that we could potentially collect, I can't speak to that.
Okay. Other questions from the floor? Yeah.
There's a question for Faisal. In terms of your investments, where do you see your exits coming from? Will they be to tech companies or to real estate companies?
We keep all options open, right? Like, so I can give you, I'm not going to name any that we're looking to exit, but we're looking at one where we might IPO it, so a listing on one of the markets. We're looking at others where it might be a strategic acquisition to a traditional incumbent player in the market. I think that if you build a good business and build an all-star team in that business and they deliver their plan, then you'll have plenty of options for exit. So it's safe to say, other than the earlier investments that we made back in 2013, so 2013 were our first prop tech investments. That's our older vintage that is kind of maturing to an exit today. Most of our other investments are quite recent, so we're not putting a lot of thought into exiting. We're not thinking of fire selling anything. We're looking at really investing and growing these businesses, right? So for most of the prop tech businesses we invested in 2015 and 16, we still have 3, 4, 5 years to go.
Okay, we have a question from Jersey, from Tim Morgan Morant Ozans, which basically is that, does the challenge of Brexit and the likely friction on London's role as EU's financial centre mean London will have to work harder to be an innovative centre for real estate structuring and financing? Or do you see greater real estate opportunities in Frankfurt and Paris? Emmanuel, do you want to?
Sure. I think there is a lot of confusion with Brexit because Brexit has an impact on mostly the passporting of regulated services. So it all depends what you do in it. And actually, international investors, when they invest, are not touched by the single market. So, and they see the dynamic of the currency as well as the yield. So, we saw in our platform, we saw the German investors after the Brexit vote just coming more aggressively to the UK market because of the currency discount, and also getting into a long term. So I think long term UK is there to play. What is difficult, and we see it as an opportunity, is a lot of business model, and it's important for fintech, are frozen because people don't know which regulatory license they need to be able to do a pan-European model. And with the beauty of software is you have in the financial services industry, not in hard tech, but financial services is attract global money for local business, and right now is how to get there. In London, I think London has the infrastructure that nobody has. So, for instance, the exchange licenses are mostly regulated here. So Europe doesn't have exchanges that much that could replace the pipes that we're using. So the world needs the pipe of London, and the innovation pool, it's there. So it will innovate, and it has innovated. So we're quite relaxed, and actually we just closed our Series A with a German bank, and that was not a condition Brexit because they know they're going to need London. I think everybody needs to price political risk now, but this is a theme across the board. And that's nothing to do with Brexit. It's more to do with the volatility of political environment, and it will have an impact on industry. But I would say, and that volatility, and I come from the hedge fund world, come with pricing and deal opportunity. Because if the market is always stable, nothing happens. If you have volatility, you have sellers and buyers. So for me, more volatility means more trade. More trade needs different people coming from different points, and we see that actually.
Yeah. Faisal, do you want to add anything?
No,
No.
that's what we do.
Okay. I mean, in terms of the, I suppose another question which someone asked me before was about, you know, regional impacts, and obviously there's we talked just there about London, but also what about across the regions of the UK and the other major cities, or going down that level to the next level down, and your sort of the impacts that this may have, and roll out your platform or other activities that you're doing?
What we see on our platform is London is not really a British investment destination. It's a global city with its own kind of. It's an exchange on its own, attracting the money, and everybody play in London. Outside, we see. I mean, the rest of the world love the strengths of the UK market, which are, you know, we see a lot of things on student housing. It's a lot of demand. The rest is the pure illiquid part of the business, which are, you know, industrial cities or. But I would say, I mean, I think people are waiting and see on the rest of the outside London. We have a few, I would say, outside London and the top sub 500,000 cities, the smaller ones.
Top how many?
You know, like the medium-sized cities, 500,000. We have to bear in mind that the real estate market in the UK is one of the most developed in Europe. So when you take the top 10 cities compared to the top 10 cities in Germany, we have a very functioning real estate investment market, a very functioning real estate adapting market. Alternative use value is amazing. So I think we have a lot to play with. And the world is still not to price those opportunities for the last 20, 30 years. It's more in areas where there's going to be a collapse of the industry where you don't need to price or demographics. And there are some parts of the UK, but nothing to do with Brexit. It's more about the economic uncertainty for the next 20 years are to adapt to the technology innovation, which we see debates across the board. UK in general is much better placed than the rest of Europe in that perspective.
Yeah. Any reflections on that? I mean, Matt, what's your plans?
Go ahead.
Sorry.
We come at it from a slightly different angle. I mean, as I said, for us, there's always going to be people going to offices, and there's always going to be people that want to have a better experience about going to that office. You know, 200,000 plus people woke up this morning, or will wake up this morning, and they'll go to work in a WeWork. I can't control if their lives or if their day is good or if it's bad, but I guarantee you that if they went to a WeWork, it will be a little bit better than had it been going to an old office. So for me to worry per se about the different regional markets in the UK is possibly the wrong way to look at it. Sure, everything has a timing, and it makes sense maybe for me to go to the more major cities first. But I truly believe that every city where there is people going to offices can benefit from our platform. That's just the way I look at it.
And so is the question around the regional?
Yeah, just across the UK, really, a rollout from London of different ideas and so on.
I mean, we've invested in a startup from the north just 5 months ago, but it is the first, and we've been going for 3 years. So we'd like to have a broader footprint nationally and in the regions, but the reality is most of the innovation we're seeing is down in London. We have made some continental investments out of the Netherlands, one from Belgium, one from Bulgaria, so we're keeping an open mind. We're still a young business, but the ambition very much is to cover all of the UK, all of Europe, and kind of head east toward Asia Pac, while our, I guess, main competitor in the US focuses on North America.
Right. Okay, any other questions from the floor? Yeah.
Yeah, if we restate this, who should we have on the panel in a couple of years? Disruptors.
With REIT status, you mean?
Who will be on the panel
Yeah.
in 2 or 3
I
years'
can take
time?
Yeah, if you're doing this in 2 to 3 years' time, who would be the people that you would be thinking should be seeing?
So for us, like, it would be incredibly rewarding that it wouldn't be us as the investors sitting here, but it would be one of the portfolio companies, which is, you know, just an early stage startup today, but a couple of years down the line has raised quite a bit of capital, like WeWork has, and has really delivered on their plan and can speak from a position of authority and share the successes that they've experienced. I mean, that's what we would like to see happen, that the startups themselves have the position and the authority and the success to speak at a panel like this.
I think from my perspective, if it's a panel about disruptors, I would hope that neither myself nor any of my colleagues were on here. You know, I think that by then I would hope we're past the label of being disruptors, and I think people would perhaps look at us and just appreciate that what we're doing is we're an opco, and we focus on office space, and we do it really, really well, and people just say that makes 100% sense, and it's not disruptive.
Yeah, I hope in 3 years we won't talk about disruption. We will talk about joint innovation, which I think the real estate industry is quite good at, and AREF is one of the sharing good strategy, but how to innovate better, because we've been doing it for a long time. So I think disruptor is a term we use, like blockchain, because we don't really quite understand, and it's kind of threatening. But actually, it's innovation for better services. So I hope we're going to have a panel of innovators rather than disruptors.
Okay, I think that's a great note to end. There's a chance for those in London to obviously to carry on the conversation over coffee and so on now, but I just want to thank you all for coming, and thank you very much to our speakers.